Market gives up early gains. The broader market underperforms with the oil and gas, consumer durables dragging the market. The Nifty ends near the 24,400 level, while the sensex slides to around 74,100 odd.
Shares of IndusInd Bank tumble in trade. This after RBI gives only 1 year extension to Managing Director and CEO Sumant Kathpalia as against the bank's ask of 3 years. Infosys stock gains after positive brokerage commentary.
BSE slumped in trade after Nuvama trims the target price. Similar fate for Trent as Kotak cuts the target price for the stock. ICICI Securities gains after the NCLAT upholds delisting from stock exchange. Welcome to Markets Forward, your go-to show where we get you up to speed with regard to today's trading session, and we'll set you up for tomorrow as well. I'm Nigel, and with me is Vinny. Hey Vinny, it was that sort of a trading session, right? When we started off pretty much okay. We had the momentum, and yesterday India's win as well had elevated
I thought there would be cheer, at least for that front, that there would be some green, but seems like the market really didn't want to hold on to that green.
Well, indeed. To be fair, actually, for the initial part of trade, we did pretty well. But the final couple of hours of trade, there was some weakness that crept in, both on the headline index as well as on the broader markets as well.
Absolutely. And Nigel, you know what I was just seeing right now? Only FMCG was the only sector that managed to close in the green. Apart from that, we saw the fall coming in. Real estate, top sectoral loser. PSU banks, that didn't manage to hold on. And obviously the underperformance that we saw from the mid and small cap, like you were saying.
Well, that's right. Well, first up, let's tell you what we have lined up on the show for you. Today, we start off with all the top movers and shakers. Hormuz will be joining to tell us that. Well, the stock of the day was IndusInd Bank, so we'll focus on that. OMCs like IOC and HPCL, as well as ICICI Securities, we'll be focusing on them as well. Stay tuned as well. We'll tell you why all these stocks were buzzing in trade. Last but not the least, we'll delve into the key market events to watch out for tomorrow's session. Well, let's get straight to our first segment then. Hormuz joins us to tell us all the big movers and shakers of trade. Hormuz, take it away.
Well, it was a forgettable last couple of hours for the bulls and particularly for the broader markets. Actually, the broader markets were underperforming all through the day, and it just exaggerated towards the close of the trading session, led by these capital market linked names, and these have been the ones in focus almost for the better part of this year. And you can see it in the price action as well. Most of them ending at the lowest point of the day. 361 WAM and JM Financial were the two worst performers on the Nifty 500 today. BSE, yet another price target cut coming in after Goldman Sachs did it twice last week. And Angel One, of course, is now down 50% from its all-time high. A lot of these MFI linked names also did not have a very good day at the office. Most of them with Suryodaya, Jana, Mass Financial, Spandana, Spurti. Again, most of them ending at the day's low. Jana seeing some recovery from the lows towards the close, but still ending with losses of anywhere between 2 to 7% in today's trading session. Real estate was the top sectoral loser today, and most of the constituents ended with losses from anywhere between 4% to 7%, led by Mahindra Lifespaces, which also ended at the day's low. Some of the newsmakers in today's trading session, led by IndusInd Bank after the slew of downgrades and price target cuts which came in today, ending 4% lower, making a new 52-week low. Indian Oil and, of course, the OMC peers, we'll talk more about that on the show. IDBI Bank, of course, the perennial disinvestment candidate. HUDCO, the street disappointed after its dividend announcement, and Bodal Chemicals 15% higher after some positive commentary that came in. And lastly, volume buzzers in today's trading session on either side. Kalyan Jewellers now almost down to 400 rupees on the stock. Avanti Feeds, Solar Industries and Awas Financiers were some names that bucked the trend today. Back to you.
Thank you so much for that, Hormuz. Surely important movers in trade that we watched out for. But, let's bring on board our experts for today. We have Anand Tandon as well as Thakkar who are joining in with us to, analyze the markets, what's happened today in today's day as well. Jack, let me come to you because 22,500, Nifty didn't manage to sustain those levels. What are we watching out for? Again, are we watching out for the week that we saw a couple of weeks back, that fall that we saw in the market? Similar trends is what we're expecting again.
Good afternoon to you, Vinny and Nigel. Well, see, last week was a very good week as far as the recovery in the Nifty and the broader market is concerned. And we did see Nifty bounce back quite sharply from the levels of 22,000. In fact, it's managed to bounce back until the levels of 22,700 as well today, until today morning. But then Bank Nifty and Nifty, I think these are the two sectors which are, finding resistance at the higher level. So as far as Bank Nifty is concerned, 49,000 is acting as a very crucial resistance. It's not able to take off those levels. And as far as Nifty IT is concerned, then we're not seeing that kind of short coding coming in the stocks. So, I would say that going forward in Nifty, 22,000 will act as a very crucial support. I think the probability of those days holding out in the near term is quite high, and there are a couple of reasons for that. One is that the dollar index has pulled off quite a lot from the high lows from 110 now to at least at 104 to 104. Crude oil has pulled off quite a lot. The volatility in the India VIX has pulled off as well quite a lot from 19 levels to now below 14 levels as well. The CBOE VIX in the US markets have also pulled down from 26.5 or 27 levels now to 24.5 levels. So there's a more than 10% difference CBOE VIX as well. So looking at all of these, I think the probability of Nifty trading within this range of say 22,800 to 22,300 for this particular week is quite high. As far as March series is concerned, I think the Nifty is likely to inch towards 23,000 slowly and gradually till 22,000 levels are held. And the largest stocks like Reliance, which have finally seen a good foot base and short selling as well here in past couple of trading sessions, clearly indicate that Nifty is likely to inch higher. Apart from banking and IT, I think most of the other sectors are clearly indicating that at the lower levels we'll be seeing a good buying interest from outside of the market.
Okay, all right. Thanks for that, Jay. I want to come back to you and ask you your view on IndusInd Bank. How's it looking at the charts? Because in today's trading session, the stock tumbled after they got just a 1-year extension for their top boss instead of the 3-year extension that was requested by the bank. Abhishek joins us to fill us in with more on that. Abhishek?
Well, not the decline, but take a look at the RBI's, uncertainty with respect to the MD and CEO's tenure. Now, they have reduced the tenure extension only up to 1 year versus 2 years that they gave in the previous time around. And this is also on the back of the fact that the board recommended only one name for the, MD and CEO extension, and they did not give opportunities. So last time RBI had given 2 years tenure versus 3 years that was sought by the board. Even this time they sought 3 years, but they got only 1 year. Now, analysts do say that, this means that the board will have to find a replacement, now, which will create uncertainty with respect to leadership in the interim period. Now, previous similar instances wherein, what the board sought versus what RBI gave was on the lower side. That happened with RBL Bank 1 year, Bandhan Bank 3 year versus 5 year that they sought. Federal Bank not even approving a 1 year extension what the board had sought. So that had led to negative with respect to stock price reaction post the RBI outcome. So IFS says that weak profitability even in FY26 with ROE of around 10.5% coupled with leadership uncertainty should keep the stock price under pressure in the near term. So brokerages, some of them have cut the target price like Jefferies, MK as well as IFS Securities. All of them have buy call except for BofA Securities, who has downgraded the stock recommendation to underperform while cut the target price to about 850 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Jay, how is it looking on the charts? The fundamental news flow isn't great, but the stock is cheap. There's a big amount of short built up in there. And in the lead up to this event itself, the stock was down 12%. How is it looking at the charts?
Well, I would say that there was a good amount of short that was built up in IndusInd Bank, and we saw it getting covered by almost, I would say, 20%. But the prices did move up, but now it's not able to hold on to its previous lows, and has now formed a fresh 52-week lows as well along with this news. And we have seen further short getting added. So I think that on the upside, 950, 960 zone, I think those levels are taken off the risk of this stock, further things and profit booking, or I would say further selling pressure, at least until the levels of 840 is quite high. My view would change from down to up only about the levels of 960.
Okay, Jay, thanks so much for the view coming in on IndusInd. But let's move on and bring on board Darshan, who is here to tell us why OMCs were in focus today. It seems like there was some announcement that came in on no LPG compensation that has been announced this time. And this is the second round of the supplementary demand. So, Darshan, what does this mean for these companies and what is this announcement?
So first, shares of all three oil marketing companies, IOC, BPCL and HPCL today saw a close with a cut in the range of 2 to 3%. Major part of the fall has come in the second half of today's trading session, and the reason is Finance Minister Nirmala Sitharaman today has presented second supplementary demand, and in this LPG compensation provision is not there, and that is the reason that all three shares of all three oil marketing companies have seen a fall from days high. And Oil Ministry had sought for LPG compensation of rupees 35,000 crore. Remember, as of 9-month FY25, if you add the under recoveries of all three oil marketing companies, total under recoveries were of rupees 29,223 crore, with IOC forming almost 50% of that. For IOC, it was more than rupees 14,300 crore. For HPCL, it was almost rupees 7,600 crore. And for BPCL, it's almost rupees 7,300 crore. But yes, in the last 2 to 3 sessions, all these shares of all three oil marketing companies had moved higher because of the sharp fall that we had seen in crude. But there was an expectation that LPG compensation may be announced in the second supplementary demand after it was not announced in the budget. But second supplementary demand 2 did not have the provision, and that's the reason today we saw a fall in these three companies.
Okay, all right, Sudarshan, thanks a lot for that. Anand, you know, it's becoming very, very difficult to invest in any of these companies. You're tracking crude, you're tracking the offtake, suddenly you don't get some LPG compensation. So then it makes, you know, valuations, the PEs, the dividend yields immaterial when this sort of uncertainty. What do you think about these stocks? They've underperformed, and in the last week or so, they started outperforming. But again, negative news flow coming in.
Well, that's been the problem with most government-run companies. At the end of the day, the government policy keeps changing. It was only in the last few years that there was a certain amount of certainty in the fact that they could change prices for their retail products at least. Even that was taken away during the just pre-election. And, you know, the rest of it has always been a bit of an issue. I would imagine that this will get sorted out. But that said, I don't think that there is any great valuation comfort in any of these companies anyway. It's not as if, you know, you're going to see dramatic growth coming through, or, you know, that there is a sustainability that is required, that is expected in terms of where these companies are headed. They are dividend plays generally. So whenever you get a good dividend, that's something one can look at. At best, they can be viewed as tactical investments.
Okay, surely keeping an eye out on all these OMCs. But let's bring on board Vamakshi, who's here to tell us a couple of newsmakers in today's trading session. BSE, Trent, ICICI Securities. Vama, take it away.
Well, absolutely, Vinny. You know, let's first focus in on BSE. The stock is in focus not only today but over the last couple of sessions. You know, last week when we saw BSE, Goldman Sachs had actually reduced the target price on this counter not once but twice. And today we have a note coming in from Nuvama. They have a buy rating, and they too have cut their target price from 7,250 to 5,160 rupees per share. They say that you know, because of the change in expiry by NSE, the volumes for the overall industry are expected to come in lower. The trading avenues for retail investors who typically trade more actively closer to the expiry is expected to reduce, and this in turn would impact its market share. They're expecting BSE's market share to moderate to 18% as compared to 22% as seen in the month of Feb. In addition to that, SEBI's consultation paper on derivative exposure limits, which was released back in Feb, may also clip growth in their opinion. So given that factor, they've lowered their EPS CAGR from FY25 to 27 to 17.1%. They've also cut the target PE multiple to 40 times as compared to 50 times earlier, resulting in the cut in the target price. Trent is another counter we're watching out for. There was a note that came in from Kotak. They have a reduced call on this counter, target price of 5,150. They say that Trent's stock was volatile last week over the news of aggressive store additions by Westside, but this news was subsequently disproved. Westside's updated store count now stands at 240, implying a net addition of only 8 stores on a year-to-date basis. They continue to see pressure on Trent's revenue throughput on account of its own densely located newer stores of Westside as well as Zudio. They're assuming flat revenue throughput for Zudio, and they've gone ahead and trimmed the revenue throughput for Westside, which is resulting in a 1 to 5% EPS cut for FY26 to 27. So resultantly, the stock was under pressure today. And on the flip side, we have ICICI Securities in focus. The stock was stock actually recovered from the day's lowest point. NCLAT actually upheld the delisting of ICICI Securities from the stock exchanges all 6 appeals which were filed by Quantum MF and Manu Rishi Gupta have now been dismissed. So the it can be said that an obstacle has been removed, and this in turn paves the way for ICICI Securities delisting. Bodes well for the counter.
Okay, thank you so much for that, Vamakshi. A couple of names that you mentioned over there. Anand, I'm going to come to you. BSC and specifically Trent. Your thoughts coming in on both these stocks. Trent also, what is your thought in terms of the word that's coming from Kotak, in terms of the news coming in around that aggressive store addition for Westside? They've cut the target price as well. So a bit of a concern. So what are your thoughts on this one?
Well, Trent at least has a great execution, and by and large has managed to increase their product and margin. The major challenge at a macro level, I think, remains the fact that there is going to be a greater move towards online, as we have seen, and with that, the question is how much do physical stores add value? For now, they have done an excellent job in terms of being able to extract money out of it. The issue now comes that many other players have begun to operate in the range at which Trent makes the maximum money, which is the mid-range or the lower end of the range, and that on the Zudio side, and that is where we are beginning to see some amount of pressure. Valuations aside, it remains an excellent stock. So whatever valuation you are comfortable with or parameter you are willing to use, that is the only question that you have to look at. BSC, I think, is a different ballgame altogether. We are looking at, to my mind, a cyclical topping out of capital market activity in the market. And from here, I would expect to see a much more subdued level of retail participation going forward. Most exchange stock market related entities, therefore, will have to normalize because they have all been treated as if they are going to continue to grow in one line, which is never the case. So in that kind of scenario, I think there are strong possibilities of earning downside coming through in many of these capital market related entities.
Right, surely, Anand, also in terms of ICICI Securities, you have any thoughts on this one? Because obviously that obstacle, which is Vamakshi was also mentioning, has come out now. That's gone. So now the delisting is on its way. What are you watching out for there?
Frankly, I don't track that, so I shouldn't be commenting on it.
Okay, and any thoughts that you have on pharma? Because a lot of action that was happening in pharma, though the stocks didn't see much of a move. Whether you talk about Sun Pharma, Lupin, all these names, and Biocon also was in focus on a phase 3 study trial. Any thoughts on any of these pharma names?
Well, that's one of the few sectors which is likely to weather the storm that we see in the market much better than the rest of the sectors. The numbers are still coming through, the earnings are still there, the volume growth is happening. And I would imagine that irrespective of what happens in the US market, it will be the least affected because it's the most difficult kind of product that Mr. Trump can affect adversely. So by and large, it's today for me a hideaway sector. You might want to remain overweight on that.
Got it, Anand. Thanks a lot for that. Appreciate you giving your views on all the stocks that we just discussed. And thanks, Jay, as well, for joining in. For the time being, we'll slip into a short break. You come back, we'll get you all the top corporate voices along with all the top key events you need to track for tomorrow's trading session. Stay with us. Welcome back. You're tuned into Markets Forward. As promised, let's get you all the top corporate voices that we had during the course of the day. First up, we have Vinati Organics commenting on Trump's ongoing tariff threat. The management said that 7 to 7.5% of the US tariff generally is applicable on their products. However, it's not concerned about the tariff hurting demand and supply scenario. Further, the company is not mulling over manufacturing in the United States. That's not all. They guided for EBITDA growth for the next 2 years to be in the vicinity of around 15 to around 20%, which is similar to the top line growth that they've guided.
And moving on, second up, we also had Keystone Realtors, and they don't see any impact on housing demand despite market correction. There has been 6% price rise in Mumbai over the last 1 year, and the management added very small micro markets will see a bigger price hike. Also called for a change in price definition of 45 lakh rupees for affordable housing.
Well, moving on to a CNBC TV18 exclusive then. IDBI Bank is close to privatization process. The government official told CNBC TV18 that the share purchase agreement for privatization could be finalized this month and that the invite for financial bids will be very, very soon.
And before we wrap up this edition of Market Forwards on CNBC TV18, we bring you the key events to watch out for in tomorrow's trading session. Vamakshi is here to tell us about that. Vamakshi.
Well, Vinny, lots to watch out for in trade tomorrow. Let's first start off with the economic cues to watch out for. Now, Japan's GDP data numbers will be out tomorrow, so we'll be closely monitoring that. But apart from that, from the US markets, we'll also be watching out for the JOLTS job openings data. Now, coming back to the stocks, IOL Chemicals will be in focus. The stock will go, the stock will be split from a fair price of nearly 10 rupees per share to 2 rupees per share. BL also goes ex-dividend tomorrow, so watch out for that. As far as board meetings are concerned, keep an eye out on India Shelter because they will be considering fundraising via NCDs. And lastly, as far as some other events are concerned, keep an eye out on the India-EU FTA negotiations. This is the 10th round of these negotiations which will continue in Brussels. They're already ongoing. They will end on March 14th.
Okay, all right. Thanks a lot for that, Vamakshi. On that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay with us.